market reaction is telling us something not much after the rate decisions. It's mainly on the policy statements and also, of course, the press conference from the governor, okay, the BoJ governor. So this is what we're going to go for a recap. And the second thing is, of course, we're going to cover on the bigger pictures, like what caused the yen long-term weakness. So we have been seeing like it's not about just today, right? It's been a very long time. The Japanese yen is on a very long term weakness, okay, on a very strong downtrend. Okay, so if you're looking at other currency pair, I mean on the Japanese yen pair, it's on an uptrend. So for yen, it's a downtrend, all right. And of course, the third thing is we're going to go through the next questions is whether we're going to focus in whether I mean in the futures, okay, in the futures, are we going to focus on the political risk or whether we're going to focus on the monetary risk and how we're going to trade yen if you're going to trade the yen pair, right? So of course, we're going to cover a little bit on what is coming up in the February for the Japans, especially when the election is coming on. And of course, the last thing we're going to go through is we're going to go through the technical analysis on the yen pair, all right? So we're going to cover on the key level and what are things that we need to look at and what are the technical opportunities that we're going to have for next week or even like a few weeks down after this, right? So this is what we're going to go have for today. And of course, same things. If let's say you have any questions other than for the yen pair, so you can just leave your message on our Discord channel as well. Okay, whether you want to know more about gold or you want to go know more about forex or US dollar or some things, so just leave us a message on the chat. All right, so the first thing we're gonna go for today. One moment. Okay. Sorry, this thing. My PC is a bit lag over here. All right. All right. The first thing. Let's go for a quick recap on the BoJ meeting. So the first thing, the policy rates remain unchanged at 0.7% for today. So basically, it's the same thing. Okay, there's no high or there's no high or nothing at the moment. And of course, over the policy statement, there is no explicit signal of any high. Okay, whether the high is going to come on next month or anywhere else. Okay, there's no hints over here. But of course, we do not stop reading here. One of the most important detail over the meetings this morning is the vote count. All right, so we are seeing a 8-1 votes, which is 8 voted for no cards, okay, and then 1 is voted for 8 voted for no change, okay, and then 1 is voted for a 25 basis point hike to 1%. Okay, so and why is this important? So this is actually it's not just a very small things, okay, but in fact this shows us one thing, which is that one member of the Japan BoJ is actually started to look for a hike. So it means that over here is actually considered I would consider it as a little bit of a hawkish move in the meetings, despite there's not much going on for these January meetings, all right? So the only thing is that now we are seeing one member is voting for a high, okay, voting for a high. So of course, for the person that votes for the high is called, the official is called as Takata, okay? So basically, of course, he's asking for a high for some reason. Okay, the first thing is because he believes that Japan has already achieved the price stability, means that the inflation is quite stable right now. Okay, and of course, he also saying that the inflation risks are now skewed to the upside, means that now the inflation risk is going up. Okay, so he would like to increase the rates to slow down the inflations. And the third thing is that he oversees that the growth is now no longer constraints that holding the BoJ from not hiking the rates. Okay, so this is the reason he gave up, okay, when he voted for the 25 basis point hike. So how should we read this? So basically, over the dissent is confirmed that there's actually there's actually the internal debates has shifted, means that they are no longer asking should we hire or something, but other than they are actually considering how far should they hike. So basically, we could treat this dissent as a leading indicators means that the BOJ is right now is considering high, but of course it's the same things, okay, for over, because as we can see the BOJ has been hinting on more high in the futures, but the issue is they need more details, all right? So of course, one of the positive things for the BOJ is that they are expecting the inflations to dip below 2% in near terms, means that they're going to hike gradually. All right, so this is basically the overall pictures of the January meetings, right? I know, excuse me, one moment. Right, so this is the overall pictures of the BOJ, and of course, if you look at this, it's considered a, I would say it's more on a neutral state. I mean neutral stance for the BOJ, which means they are still on the high, but there's no clear pictures or path that pointed out to when they're going to hike or when they're going to do some things. All right, so this is the issue. So there's a reason why we are seeing the yen is on the knee. There's not much of knee-jerk reactions after the interest rate announced. Okay, but of course for now is the focus on the press conference. All right, so this is basically how we can see for the January meetings. But of course, I would see. Okay, I would say that there's a few hawkish signal from the BOJ this week. Okay, so if you just look at the headline rate is not enough. We need to look under the hood. So what the market was expecting a quiet meetings. So the BOJs actually, okay, I mean from my point of view, they do send us a few hawkish signal that could change the game for 2026. So there's a few things, okay, the few hidden hawkish signal that I would consider. Okay, so these are the few things that we look at. Right. So the first thing is of course the votes itself. Okay, so we are seeing the 8-1 votes. So of course, it's not a divided vote. Okay, it's almost a near unanimous consensus. But the real story is they actually agree that they might want to consider a hike in the futures. So this is the first hawkish signal. And the second thing is the core CPI revisions, okay, the forecast on the core CPI. So for the core CPI is actually the CPIs that excludes the food and energy. All right. So when they are when they are revising the forecast higher, they are forecasting higher inflations, higher core CPI in the futures, means that they are seeing that the inflations are now driven by demands instead of the cost push demands. Okay, means that the inflations are caused by a real demands, internal demand from the Japans. All right, so this is what give the reasons that the BOJ is now seeing that the hike is necessary in the futures. Okay, so means that they are no longer hoping for the inflation stakes, and they are very confident that the inflation itself is self-sustaining. Okay, so this basically considered a good signal for the BOJ hike. Okay, and the third thing is the grow upgrade. Okay, so basically they remove their last major excuse, okay, which is the growth. So now the BOJ has just upgraded their GDP forecast to 0.9% in 2025 and 1% in 2026. So now you might say, okay, you might ask, hey Sean, it's only 1% in 2026. It's very small, right? Because we are seeing the US GDP on yesterday is on 4.3%, right? So, but Japan is only on 1%. It's very small. But to be honest, if you look at Japan's economy, okay, it's considered huge, okay, because the context for Japan's right now is that the potential growth rate for Japan is only at 0.5%. Okay, it means that if the GDP for Japan is 0.5%, it's considered a growth. It's considered because we know the Japan is on a stagflation for a very long time. All right, so right now when you're seeing the 0.5%, okay, it's considered potential growth, and when you have 1%, it's considered a good thing. So it's very obvious that the economy is now growing faster than what market expects. All right. So so for right now, the growth is no longer an excuse for BOJ to keep their interest rate low. Okay. So this is why the economy is running now. Is running good enough, okay, to support the normalizations right? So this is another signal from the BoJ, and of course the FX volatilities. So recently we are also seeing that the finance minister and so even the US is pressuring on Japan on the current the over depreciation of the currency, okay, of the Japanese yen. So now they also note that the FX volatility has larger impact on the price than the previous. So it means that they are not really comfortable on the weak yens. Okay, and of course, for the latest updates, because I don't have much time to look at the latest press conference, but the latest update I got over here is that over the press conference just now, the BOJ the governor, BOJ governor Ueda, just say that they are not gonna hike the rates just to support the yen's weakness. Okay, so this is one of the reasons that caused the volatilities over the yen just a few moments ago. Right, let me see if the yen. One moment. This is a bit slow over here. Right, so we are seeing there's a whipsaw over the yen. Okay, so this is something that we want to look at. Right, so these are all the updates for BOJ. All right, so we can conclude it. So basically, we are seeing quite a hawkish signal from the BOJ on January. All right, so is yen gonna getting strong right now? Okay, is yen gonna go into reversal? Okay, of course, the answer is maybe. Okay, but I believe it's not yet. Okay, and I tell you why and how we can look at it fundamentally and technically. Okay, so if you're going to summarize it, the yen may got strengthens for a while, but technically it's still on a long-term weakness. Okay, so this is what my overall view for the yen right now. So this brings us to one thing: how we're going to look at the yen fundamentally. So the first thing we're going to ask, what caused the yen long-term weakness? Okay, so basically it's not just about the interest rate differential anymore. It's about the structural risk for the Japanese yen. So these are a few reasons why the yen is actually on a long-term weakness. Okay, on a long-term weakness. Okay, so the first thing, if you look at the top of the chart over here, let me point out. Okay, over here. So right now, one of the reasons that cause the long-term yen weakness is because of the debt threat and of course the yield pressures. Okay, so if let's say we're looking at the Japanese government debt to GDP, okay, the debt to GDP ratio is now actually sitting at around 250%. Okay, so it's one of the highest in the developed world. Okay, and of course for decades, okay, this wasn't a big problem for Japan. Okay, because of the interest rate is very low. Okay, so basically the government can just borrow money without any cost. Okay, because as we know previously, the government the Japan interest rate is at negative, okay, or near zero. So basically, when the government try to borrow money, okay, they do need to pay an interest. Okay, so it's not a big issue. But as the global yield rise, okay, and inflation is coming up, the BOJ is trying to, the BOJs need to hike right now. Okay, so when the interest rate goes up, okay, the bond yields will go up as well. So imagine when you are borrowing, like for example, for us personally, okay, if let's say for example you are borrowing 1 million, okay, you're borrowing $1 million, okay, and then you don't need to pay any interest. All right, so there's not a big issue for you. You can just borrow it, okay, and then you can do investment you want, you can spend as you want or something, because basically you do need to pay any interest. Okay, so if let's say you make some profits and then you can just return it without any interest. So but right now the interest rate went up, okay, and you are borrowing 1 million, for example, and then you are making, like for example, we say you're not a very rich person, okay, you only like make 50,000 a year, okay, and then you are borrowing 1 million, okay, But then right now suddenly there's 1% interest charge on you, so you need to pay like 10,000. Okay, so this is a very big cost for you. So this is the same thing for Japan. Okay, so right now, if let's say the BOJ is trying to raise rates to save the yen, okay, because the yen depreciates and the inflation is coming up. If the BOJ is trying to raise rates to save the yen or control the inflations, and the cost of servicing this massive debt explodes, means that now the governments simply cannot afford any high interest rates bonds or borrowings without risking the fiscal collapse. Okay, so this is what we call as the unsustainable borrowing cycle. Okay, so this is when the markets start to lose confidence. They start to lose confidence. Okay, or they are no longer believe in Japanese yen. They are no longer confidence in whether the government is able to pay back the debts. Okay, so this is where markets start to lose confidence and moving away from the yens and even the bonds. Okay, and of course, market also lose confidence in the BOJ because, as we can see in the past, okay, the BOJ is trying to, like, okay, sending out a hockey signal, saying they're gonna hide, but eventually there is nothing much going on. Okay, so this leaves us go into the policy credibility gap. Okay, so when the market has lose faith in the BOJ, okay, whether they're gonna hide or not, okay, when they lose faith, okay, now they're seeing that the BOJ is unable to achieve the three core targets simultaneously. Okay, so what are the three targets? Okay, the first thing, they are trying to control the inflations. Okay, which right now it remains sticky above the 2% target. Okay, and the second thing is they need to protect the wage growth. They need to protect the employment. They need to protect the economy. They need to have the economy on the growth path. All right. So they need to do that. And the third thing is that they need to maintain a stable bond market. Means that they don't want their bond market to crash. All right. So this is the reason. So for right now, if let's say the BOJ is going to hide, okay, BOJ hide, okay, so when the BOJ hide the price, the first thing they're going to cause financial instability because the governments need to pay more, okay, need to pay more to borrow. All right. So when they need to pay more interest to borrow, they will have less money to spend. Okay. So if they have less money to spend, okay, and then the economy gonna slow down. All right. So if let's say the economy slow down, the inflation is gonna get impact. Okay. All right. So it's very difficult for the BOJ to achieve the three targets at one time. Okay, simultaneously. So this is why the markets now sees that the BOJ is on handcuff, means that they are unable to hide as they want, but they still need to hide because of the inflation. So you can see the things that BOJ is handcuffing because they need to slow down the inflations. They need to hide. But if let's say they hide, the government fiscal the fiscal outlook is not going to be good, and when the government spending is low, okay, economic might get impact. So these things are very difficult for the Bank of Japan. All right, and of course the one thing is that we are also seeing the Japan election is coming on soon. Okay, so this also lead the markets to believe that there would be some political pressures, okay, specifically from the Takachi administrations, the spending plans, okay, because they believe that the government will force the BOJ to keep the interest rate low. Okay, so this is the reason why now we are seeing that the yen is unable to have any strength. Okay, they are unable to go up anytime soon. So this is the reason that they support the yen on their long term weakness. All right. So basically, this is the vicious cycle that bring the yen or the Japan's into a deep structural crisis. Okay, so this is the reason why we are seeing the yens and the bonds on the double kill mechanism. All right, so this is the issue that we have right now. Okay, now the bond yield is up. Okay, and then the bond price down because no one is want to buy bonds, but at the same time, okay, the currency also down. Okay, so if let's say if you understand about how the years and the currency work, okay, usually on the traditional theory, okay, in a normal country, let's say for example in US, all right. So when usually the bonds yield go up, okay, the currency will also get stronger, okay, because investor want a higher returns. Okay, so this is the old paradigms, okay, the traditional theory, okay, for the capital markets, okay, when the years go up, okay, years go up, interest rate go up, okay, currency strength will go up as well. Okay, so this is the traditional theory. But for Japan's, okay, for the yens is on the opposite way right now because of the credit risk. Okay, so in Japan, so how this works? Okay, because of the Japan's debt is so high. Okay, so when the Japanese bond yield rise now, okay, investor don't see this as a higher returns. Okay, means that right now you are buying a bonds and then you have the higher returns. Okay, correct. So but investor don't see this as a higher returns. Okay, they see this as a credit risk. Okay, so because they're afraid that the government is not able to pay its bills. Okay, right now, okay, because we're seeing that the BoJ is on a very huge debt. Okay, so imagine someone's okay is on a very heavy debt. Okay, okay, your friends like owing money a lot. Okay, everyone is owing a lot of money. Okay, and then one day it's come to you and say, hey, Sean, can you just borrow me like $1,000? So for you, what are you gonna feel? Okay, you say, okay, can you borrow me $1,000? Okay, I'm gonna pay back you on 10% interest rates. Okay, I'm gonna pay you back on 1,100. Okay, I'm gonna pay you on 1,100. Okay, I'm gonna pay you back. So what's your thinking? What's your thoughts? You're gonna feel like, you are owing so much money right now. Okay, how are you gonna pay me back? Right? So you don't see this as a good returns. Okay, you're actually seeing this as a credit risk. Okay, so right now they are selling the bonds, Japanese bond. At the same time, they are selling the yens. All right, so these are the reasons why the yen is actually on a long-term downtrend. Okay, so the takeaway over here is that as long as this structural debt remain unsolved, okay, any spike in the Japanese year or any hike won't actually support the yens. Okay, means that we are still seeing the yens on a long-term downtrend. All right, so this is what we are seeing right now. All right, so this brings us to the next questions. So you might gonna ask, okay, is the yen gonna be continue going up or down? Is the yen going to continue to depreciate? All right, so of course, here's the question. Here's the answer. Okay, remember, okay, even the path of resistance for the yen right now is still pointing down. Okay, means that the yen still gonna depreciate. Okay, but we need to understand one thing. Okay, the markets never go up or down for long periods. Okay, they still gonna have a rebound or something. All right, so here's the things that we're gonna look at. All right, okay, one moment. Okay, so the trading is never on one way. It's never on one way. Despite for right now, we are still seeing the yen's gonna be a structural risk. Yen's still gonna on depreciates. Okay, but I'm still seeing the potential of short-term recovery for yens. Okay, it's a short-term one, of course. Like if you're looking at the charts, okay, we're gonna look through the chart later. Okay, even on and broad uptrends, okay, we are still going to see some short-term downtrends. Okay, so this is same for the yen pair. All right, so it's never going to be a one-way street for currency. All right, so I'm still seeing a few potential good things that would support some yen short-term recovery. Just for short term, of course. Okay, so over here we can look at the charts over here. All right, so basically the yen weakness driver is over here, which is what we covered just now. All right, the first thing, the high debt and the bonds issuance. Okay, the bond price, everything is going to be a risk for yens. Okay, this is going to support the long term. And then for political pressures on BOJ, okay, recently we see that Takaichi is gonna have more fiscal spending. All right, so this is gonna increase the pressures on the fiscal, okay, on the Japan fiscal. All right, so this is another bad reason for the yen. Okay, and of course, the lost market confidence is one of the reasons why. Okay, so this is what we covered just now. Okay, so this all the things that are gonna pressure the yen. But of course, over the near terms, okay, there is still some event-driven support for the yens. Okay, if there is a few things happens. Okay, so the first thing, okay, is safe haven currency flow. Okay, which is the carry trade unwind. Okay, the carry trades unwinding. Okay, so of course for years, the hedge funds or the investor or any big investor or any institutional investor, they actually borrow cheap money from yens, okay, to invest on high risk assets, okay, such as the Nvidia, or invest on the Bitcoin, or invest on a tech stock in the US. Okay, so this is when the Japanese is having the outflow. Okay, it means that the Japanese yen is flowing out from Japan, and we are seeing the depreciation of the yens. But if let's say one day something has happens, okay, like for example, if let's say we see the trade war comes up again, or we see there's a market collapse from the US, okay,